everybody, I'm Giuseppe Basilio, also known as the FibStalker. Welcome to this weekend video review part 2. It's March 18th, 2018. Actually, it's 19 because it's 20 minutes past midnight AM EST time in Toronto. This video is part of the FibStalker Analysis and Trading service. Now, as usual, I ask you to read and accept the disclaimer here. Past performance is not indicative of future results, and trading forex carries a high level of risk and may not be suitable for all investors. Okay, so let's start this part 2. In part 1 I reviewed the commodities, the indexes, dollar index, gold and silver, and the majors, plus a minor, the New Zealand dollar, US dollar, and the US dollar, Singapore dollar. And now we're going to review all the other main markets and the other markets as well. So that's the way I classify these markets. You might classify them in a different way, but what is important is that we identify the opportunities in this market. That's the most important thing. Okay, so Australian dollar, Canadian dollar, a lateral move here, support on 96.60 area in the daily. On the weekly, we identified 50% long. First target was reached, second target was not reached. And after that, we saw this market actually correcting on weakness of the Australian dollar. Okay, so as this market continues lower here, what we are going to look at a potential reaction to the next measure move here in this inner sequence, and that would be the 10010 area. Okay, so any opportunities to short this market would come from retraces into extension likely. Okay, so again, we're going to use the low of the first bar here as our anchor going forward. If an opportunity is given before the market hits that 1011, then that's going to become an opportunity for a trade short. And the Japanese yen has continued lower strongly here on piggybacking that strength in the Japanese yen here. This level is being pierced, the area of potential support here. So this market could now continue and visit the lows, the 075 area here. The extension that we are using, the market never came to test the 8407, so we are using a jumping extension here from the 8560 lows to lows, and that has been in play since it has been tested here. Now the first target is near previous lows, we are there, and this market could continue lower. If that happens, then a continuation, for the continuation we would use the lows to whatever new lows we are given. The euro versus Australian dollar, this market has moved higher on relative weakness, bigger weakness of the Australian dollar on the European dollar, and this market continues higher. It has traded this 50%. It has target within that short area. That short area starts at 163.04. It has come into play before. It could come into play again. The first target is above that, or within this area, so we'll see what's going to happen next in this market. Okay, so the inner measure move here, it's a 50%. The first target has been hit. The second target is likely to be hit if we get additional weakness here, and after that we can trace the extension highs to new highs. Okay, so on the daily here, we need to consider an inner measure move that would justify the participation around this level, and the previous notable anchor here will make more sense probably, and that's what we're going to use going forward. This traces helps price into that second target of the larger time frame as well. Euro versus pound, the lateral move in this market seems to be going forever here. So the market now it's back to testing that 88.08 total useless market here because of this, but this is a market then when and if it will start moving, then might offer great opportunities on the downside here, because as you can see there is a lot of room for this market to move. Okay, so we're gonna look and see what happens, whether the weakness in the euro is going to help this market into that first target 86.16 this week or next week. We'll see, based also on the moves on the dollar index. And but for now, I mean, we are going to wait. Euro Canadian dollar, the weakness of the Canadian dollar of course has kept pushing this price higher, almost 161. Makes it difficult also when you go back and travel back from Canada back to Europe. The first target, the second target of the inner measure move here on the monthly, it's very close. It's 161.65. The high was at 161.39, so it's not been tested yet, but that could be tested this week. Okay, and after that, the monthly here is showing potential retrace into the next measure move. Whether that is going to happen or not, we really don't know. This market has also weekly setup here that is being respected. That is the corresponding setup that we also saw on the US dollar, Canadian dollar. This market, they all go together. So because of this setup, because of these setups, there's the possibility for the market to continue even higher and break that previous size and go above that second target of the inner measure move. There's also a second target of the outer measure move. It's much higher, 166, 60 area. Okay, Euro Japanese yen moving lower on strength of the Japanese yen, as well as weakness of the euro. And as we can see here, that level that initially held, now it's not holding anymore. So what that means, well, that means that you know, we're gonna see likely going to see lower prices here. Now this market is as we mentioned, is within this 50% of the larger measure move. So on a very large time frame, this market is actually in a consolidation. Of course, that makes little sense to us, because this consolidation will take many years to complete, but it gives us a perspective of where this market is moving, and this market might be moving to the bottom of this area and consolidation. Okay, so if that's the case, in the coming days and weeks, it might offer opportunities for shorts. And on the daily, if there is any retracement, that retracement would come from the lows of the first bar here. So if this market were to retrace from the current levels here, that would be lows. So that would be lows to current lows. And if the lows were in here and this market started a reaction, that reaction could bring price into 130.40 area here. Euro versus New Zealand dollar. The US versus New Zealand dollar is moving within these two areas of resistance and support. Bulls have filled, bears have filled, and this market is now testing the top of this range here. Could continue higher or retest, depending also on the weakness, relative weakness of New Zealand dollar to the euro here. Okay. What I noted last week was that for the first time now in this consolidation, the longs have held, so there is still a possibility for this market to actually continue its correction higher in this range into the previous highs at 180, in the 180 area. Pound versus Australian dollar. The pound versus Australian dollar has, as we can see here, it keeps moving higher on relative strength of the pound versus the Australian dollar. There is a level on the monthly, is the 189.95, and if the market gets there, we would certainly get the attention of algorithms, and we'll need to test that level as well. This market has not traded into the 50% in its continuation higher, so it's trading an extension, and we have attempted to identify that extension last week. We actually identified a continued sequence of measure moves here. That measure move was not respected in February, so not really a technical market. However, it was respected this month. The 167 was never pierced, and so that gives us the allows us to consider this measure move here and the targets, related targets, and the first target is very close, is 181.49, the second is 183.95. Okay. Pound versus Australian New Zealand dollar, similar situation here of on weakness of the New Zealand dollar. This market is recovering, and we were looking for a retest of the 87.14, but relative weakness of New Zealand dollar versus pound actually is causing this market a reaction higher again, a continuation higher again in this market. Now this market had at the beginning of the year this extension along 187.14 that has traded here and has targets above. Okay, so because that's still intact and it has found participation, the most the closest target we have, and for now there's no reason to believe that this market cannot get into that level. Again, that would mean relative weakness of the dollar index, of the New Zealand dollar versus the euro, okay, versus the pound and the euro as well, and that's the reason why we're seeing this move higher. Pound versus Canadian dollar. The Canadian dollar has been extremely weak, and with relatively strong pound, we have seen this acceleration last week, which is actually a pattern that we have seen in all the markets trading against the Canadian dollar. In this market, we had a clean setup for the extension here, because this market has found participation in the 176.80 area in here, and the 177.50 area and the 176.83 was never pierced. And as you can see here, the market had two important targets here. The first target is the first target of the inner measure move. I'm talking about the 180-184. The second target is the second target of the larger measure move. Okay, so in a way, this measure move that has started here, this extension measurement started here, has now ended. I'll need to see whether weakness in the Canadian dollar will keep pushing this price into that second target, but eventually we will see a correction either into the next measure move of the larger measure move or into the measure move, of the inner measure move after the second target has been hit. Okay, so that's something to keep in mind. But I'm going to remove this outer measure move because now we know that there is the next measure move in play, and if the market gets there, we will need to test that level. Okay, while the second target of the inner measure move here is still in play, and that could actually be hit as well. So I'm going to highlight that. So what we're going to do, we're going to keep tracing from the larger highs to whatever new highs is printed, as well as after the second target is hit from the inner measure move, and see whether the smaller time frame or the larger time frame is in control, okay, of this market. Very interesting and technical market. So these markets are offering a lot of great opportunities because they are technical. Pound versus Japanese yen has seen an extension long, a 50% continuation long as fan participation. Now what we are seeing here is a potential retest of this level, and the participation here last week has come potentially from an extension. It's not the weekly has failed, so there is something else that is in play here, and it could be a previous swing high that is coming into play again, and that's not the case as well. So it's an extension, and it might be a level that it's not as might be a jumping extension here coming into play. But it doesn't matter, because once we have identified that level, if we have any 50% retraces or extension from this move, those are going to become opportunities to trade this market into 146, and now if 148 pierces on the downside, then this market is due to continue lower into the next measurement, 140.77. Okay, so interesting market as well. There are of course other markets that may be easier to trade and more technical, but it's always good to, if you trade this market, to understand what's going on. So New Zealand dollar, Canadian dollar, we saw that weakness of the Canadian dollar is obviously affecting also this market. This market has been moving laterally in the last few years. We've seen this market never respecting 50% here, and now it has resumed that move higher, also on top of this same extension that all the markets that are trading, all the currencies that are trading against the Canadian dollar are showing. The first target was hit, the second target is not yet hit, and after hitting the first target, this market also came back trading to trade the 50%, inner 50% here, lows to highs, or very close of doing that. In fact, maybe a partial range here has traded. Doesn't matter, because really the larger setup was the 91.90 into that first target. Right now this market is continuing higher. If this is the measure move, 0.9322 has traded. First target has been hit. The next measure move is highs to lows, and 94.19 could come into play, and potentially so that's the next measure move here that we need to look and test. The Canadian might be weaker than the New Zealand dollar, so this market could continue higher. A second target, it's justified by the setup that has been in play here at 0.9190. Okay, so it's possible for this market to continue into that level. Let's review the other markets here. Australian dollar, Swiss franc. The Australian dollar correcting, and the Swiss franc, strengthening the Swiss franc here. This market has traded very technical, has traded the 50% short on the weekly, visible on the weekly, helping price into a retest of that 71.80. which is the outcome that we have been mentioning in the last few months here. And the reason is this level has traded, pushed price higher. The price could not make it into the first target. Previous size have traded, weakness. The market was not capable of moving above that level and into the first target, the 7180. It's going to come into play again. Now we have the setup, which is this 50% that has traded last week, and the first target is well below that 7184. So it's not difficult for this market to move into that area. If this market continues lower, we're going to use the lows to whatever new lows here to capture the next measure move. Okay, so that's what we're going to use the lows, the daily lows here at 74 area to whatever new lows is going to be printed, and that could give us an opportunity to trade the short continuation. Next is the Australian dollar, Japanese yen. Weakness in the Australian dollar and strength in the Japanese yen has obviously caused a continuation lower into again that 81.40 level that we had mentioned. This market went to trade last week an extension, a canonical extension short here, and since has printed new lows, and it's now testing that 50%. So I don't anticipate this 50% holding. You see here, this is an extension. The first target is well within that area. The second target is below that area, and this is a second test of a previous area already tested already. So that's what I think is going to happen. This market is going to continue lower, and on the daily we are going to use those same patterns and traces that I showed you also in other markets. And we have lows, we have notable anchors, and those are the ones that we're going to use. So in here we have two notable anchors we're going to use. We're going to use the lows of the first bar here to whatever new lows is printed, and then we're going to use another notable anchor, which is the low of the first bar, into any low that is printed. And if this market reacts, we are going to have the clear value that we need to, and levels that we need to test. Okay, next is the Australian dollar, New Zealand dollar, and this market is also moving lower. You remember that this market this market has been very technical, and we based our analysis on a failure of the sequence of measure move in the weekly time frame. And since the market has been moving lower, the market did not come to trade into the next measure move short at 108.61. We were looking for that last week, but last week we saw a big red bar, and so this market is moving into that second target, that's 105.64. That's where this target is. Okay, so on the daily time frame here, we didn't have a lot of we didn't have a very technical market. We have to go down to the 4 hour, which we're gonna look at in the intraday reviews. But 107.52 here has traded and has brought price into the first target. That's visible also on the daily time frame, and the next measured move is lows to whatever lows we have at the moment. If the low is in, this market could come back to trade the next measure move here, and this market will still be in a sequence of measure move lower. The only caution is that this market has been moving laterally now since a few weeks within this range, so it's also possible that the top of the range is revisited. In any case, because we never sell blindly, we are going to retest this 107.13 as we keep analyzing, and we'll keep analyzing this market during the week. The Canadian dollar, Swiss franc, the Swiss franc here seems to be weaker. I should say, sorry, the Canadian dollar has been weaker here, and the Swiss franc is certainly stronger than that. The same patterns we saw in other markets here, it's in play. Lows to lows has come into play. An extension is in play on the daily time frame. The monthly and weekly are showing a sideways move, and there is the setup here that has the potential to bring this price into the lows of this sideways move. In fact, this level that we also mentioned it last week, and actually we mentioned at the very beginning of the week, when the market was actually testing the 74.21, has moved lower the whole week, has the possibility to move lower into the 71.32 this week, which is the first target of the extension. The euro versus the Swiss franc. The euro has moved lower, Swiss franc is relatively stronger here, but you know, that has resulted in a lateral move here. This market has a long setup on the weekly here, and this is an extension long. This has held, has the potential to bring price into the first target. We saw basically a lateral correction here that 116.50 could come into play again, but that has not happened yet. What has happened is that the inner measure move has played here, okay, and this inner measure move is an inner measure move of the last few days here. So as you can see, the 50% has been respected. Okay, it doesn't mean that the 116.50 cannot be tested. In fact, that would be the most natural and also stronger setup here, because this would actually come from a daily extension, right? While this is a 4-hour support here. So we'll see whether, if this level holds, this is going to be the level where the next move higher is gonna come. Okay, and if the 1650 trades, we're gonna test that level as well, because that's a valid daily extension long. All right. In any case, that market stays very strong, so it's very likely to continue higher. Has corrected laterally, and has not spent a lot of energy to correct. In here, for the pound Swiss franc, we have an extension long. Sorry, a traditional measure move long that has tested back at the beginning of March here, and as a result, the market has moved higher very, very strongly here, and has pierced the previous last week the previous measure move. Okay, now if this market comes back, it could come back and have a very shallow retrace here that would help, if tested successfully, would help price into these two targets. The first target is the 133.51. The second target is 134.47. Okay, so that's what we're looking for in this market: a retest, or sorry, a test of the extension long 31.7 in the 31.70 area, and a continuation higher. New Zealand dollar, Swiss franc. So this market is has tested a 50% short here, as we can see. The monthly, in the monthly, we were looking at a potential retest of the high 77.43, but in the last few months, this market has showed no will and no support for higher price. Means that the 50% is likely going to be tested here. Now, what we saw recently last week is the market actually participating at this 50% short, which is traced from the highs at the beginning of the year here to recent lows in February, and this level has held, which means that there is a case here for a continuation lower into previous lows and eventually even the first target in the 66.50 area. Remember that first target is helps price into that 65.50 area, which is just 100 pips below the first target. Okay, so clearly price structure here is showing lower prices. And finally, the New Zealand dollar, Japanese yen, this market here with the strength in the Japanese yen and in the weakness in New Zealand dollar has basically helped price lower. We knew that this price had already traded twice and 3 times the resistance 81.64. The longs were also in play here, but I mentioned in the last few weeks that this market would retest the 76.41. That's what has happened, and now you know this weakness here we're seeing in New Zealand dollar, which could actually continue this week, and the strength in New Zealand dollar in the Japanese yen could actually keep pushing this price lower. Okay, now last week we saw an inner measure move here come into play. We need to see whether this is 50% from a previous size, and it is, and the full 50% never came into play, I believe. And when we chase from highs to highs here, we can see that the market never tested the level. The high was 78.61, 78.74. So I'm going to remove this, and we're going to use the partial range here, which just targets below. The same consideration made for the other markets, 77.63 and 77.09 are the anchors to use for continuation lower in this market, and this market could actually now pierce this wall area of support that has supported price so far, but that doesn't mean it's going to continue. Okay, and if that doesn't continue, then this market continues lower and we can capture a continuation lower. Very good. So this is it for this review. Happy trading week, and I'll be in the room, so let me have any questions you might have, and we're gonna make this another great trading week. Bye bye now.